The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
At Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Chip Nelligar. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois. Nice to come and talk about what's happening in the markets. Chip, how you doing this morning?
Hey, doing well, Casey. How about you?
Doing okay, man. Doing okay. We had a big report come out yesterday talking about what was going on with ending stocks. Looks like they came down from 2.1 to 1.7 and some change. Big swing from what they had originally talked about. Market had a favorable reaction to that. We saw that March contract hit almost 450 yesterday, and I'm pretty sure it's probably above that. And I haven't looked at my ticker for a minute, but I guess is your reaction to what you saw there? Did you expect that? What was your overall thought process and what we saw yesterday?
Yeah, I mean, I expected a increase in demand. I remember on our wrap up a month ago on the November report, we talked about that. USDA chose to leave that unchanged in spite of a lot of evidence that our exports, were outpacing their projections. So they got another 30 days of window to look at it, and it's still outpacing their projection. So they did bump that up. It was a 150 million bushel increase in exports and 50 in the ethanol. So 200 million total. That was a big jump. It came in, with that increase in demand, it cut the carryout a corresponding amount. And that carryout at $1,738,000,000, I believe it was under the lowest estimate. So I expected, yes, up to that magnitude, probably not. The market acted well, and unfortunately, we're still in this real war right now between what's going to win: bullish corn, bearish beans. Does the bearishness of the bean market hold back corn? Does the bullishness of corn drag beans higher and cause some short covering into the end of the year here in a couple of weeks? There's a lot to be, waged in this battle, but at face value, that was a friendly report. Our ending, even in spite of a record yield, our ending stocks are going to end up a touch tighter than a year ago on corn. So no one had that on the drawing board. 6 months ago, ahead of spring and ahead of fall, fears were, 2.3, 2.5, maybe a 2.6 billion bushel carryout, and we're going to end up well under 2 billion thanks to this massive demand that we've got going.
Yeah, there's a lot of moving parts right now. You start looking at the geopolitical stuff that we see out there. We saw the stuff in Syria with Assad and all those things collapse and crumble, and you've seen that there. So you've got that pressure, and then you've got the whole thing with Ukraine and Russia that just, it's one day it's nuclear war, the next day I think we're going to work this out, and you never know what that looks like. But these markets are reacting to that almost in a paralyzing fashion. You have to have something of huge magnitude, like we saw of this report yesterday, to swing the markets one way, and those swings are huge. So I guess as you're talking to your customers, when you see these kind of swings like this, how are you advising them, talking them through those kind of situations?
Yeah, I think first and foremost, it always starts with having a plan, right?
Sure.
Knowing what your yields were, knowing what your cost of production was, where is it profitable, have offers working, because we have seen in the past very often you get a flash of news. We've seen that 3 or 4 times in the last 3 or 4 weeks in the bean market. You look, beans are up 22 cents at 9:30 in the morning, and you come back 2 hours later, you look, they're down 2. And so I think you have to have offers working at the levels you want above the market, and be willing to have those fill. If they're working at the elevator and you get some news overnight, those offers are working overnight. So it's almost a 20-hour market, I guess, in the case of maybe not quite 18-hour market in the case of the grain markets now. So it's not just from the open at 8:30 Central to the close at 1:20. You've got all the night activity and all the news overseas that are affecting it as well. So I guess take home, have a plan, know your cost of production, pick good levels and targets above, have offers working, and don't second guess it. It's easy to get emotional in these markets like this, and you just have to be willing to have that plan, execute it. Know, especially if you're making money, that's the name of the game. There's strategies out there. If you want some upside ownership, you don't have to have all your eggs in one basket. But it's easier said than done, Casey. I say that, and like it's just some real easy cookie cutter type thing, and it still takes a lot of planning and a lot of effort to do. Yep,
that's for sure. Let's talk a little bit about, on the grain side, let's keep where we're at. Let's talk a little bit about what you see happen on the cash market side. You're seeing some firming there where, we're seeing some big gaps there between basis and the board, and you're starting to see that contract a little bit. Talk about that a little bit, what you're seeing there based on what you saw come from the USDA.
Yeah, the real fireworks were on the corn side with the big demand change. You didn't see much in the way of wheat or beans. You started the debate, though, now. Well, we got 30 days, and then the January crop report is going to be out. And that January crop report is a big one because you get just an absolute dump of data, including, and probably most importantly, the final yields, right? We're going to get an update on yields. And so that has a dramatic effect as well on everything. I'm talking corn and beans. We'll get some wheat acreage numbers in January. We'll get an update on world numbers. They didn't really change much on the world numbers on this WASDE report yesterday. And so, other than the corn demand, it was a little bit of a ho-hum type deal. But I think the take home to me is you mentioned it, you hit the nail on the head with all these geopolitical stories that are happening. You got weather and production in South America. You've got some things happening in the wheat market with Russia, and it does look like they've confirmed they're not going to export nearly as much as they did a year ago. You've had pretty well publicized problems with the Black Sea, Ukraine corn and wheat crops. And so, there's some friendliness bubbling underneath of us. But, I go back to this potential in beans. Is this massive potential bean crop in Brazil going to be the weight around the neck of the entire grain? Because then you fast forward, there's so many moving pieces of this thing. It seems like we say this every year that there's, I've never seen so many, moving parts in this thing, and it just gets worse every year. So if you fast forward, if there is this big crop in Brazil, how many bean acres do we need here? We can afford to lose some bean acres. We're probably going to pick corn acres up, and that kind of caps it as well. So unfortunately, a lot of what I think the next couple quarters, maybe 3 quarters, is going to be about is how big does that Brazil bean crop ultimately end up being? Then you play through, makes your head spin about, well, okay, Brazil, raises several billion bushels of their second crop corn. They plant that in February. They harvest it April, May. They export a big chunk of that competes directly with us. What if there's a problem there now that our carryout has tightened up? That could become explosive to U.S. corn prices. So it's, again, back to your question, what's a farmer do? It is hard to navigate in that environment without a plan. I think the take home to me is you're coming into the end of the year. You got to break it up into chunks, right? And so right now, between about February 15th, mid-February, is that chunk of window where farmers are moving grain. They've got to generate some cash. You've got a lot of expenses coming in March. They like moving grain that time anyway. So you got to plan for that, right? There's been a shortage of movement. Farmers have been tight-fisted since harvest, but they're starting to loosen the bin doors a little bit, right? Take the locks off and move some grain. Well, that's going to create some supply to help counter this big demand that we've seen. And so lots of moving parts there. I think you just take it week by week, watch your basis opportunities, watch your pricing opportunities, have those targets out there, and just be ready for all this, wild news. We haven't even talked about, what's going to happen with the Trump administration when they, come into power here in January, and possible tariffs and what's that mean, and biodiesel. Are they going to fix this 45Z and then used Chinese cooking oil? It is the markets have been going nowhere, Casey. Corn's in the middle of a 4-month trading range. Well, until yesterday, we finally broke out to the top side. But you've got all this news, and it's like we've been waiting for it, and it seems like, unfortunately, it could all hit at once and cause some real havoc in our markets.
Yeah, that was kind of back to my earlier point. Is like there's so much going on that the market needs. Everyone's kind of tired of selling the what's that thing? Selling the rumor, buying the fact, or whatever that is. Everyone's kind of done that, and they're kind of worn out on that. So now they're looking for, I'm only buying facts, I'm only selling facts, because there's so much out there that's moving right now. I mean, the cooking oil thing, that's a big deal. If they said tomorrow, we're going to use all these crush plants that we've built, and we're going to get this crush going, and we're going to make our own biodiesel. That changes stuff quite a bit. We have to build more crush plants to keep up with demand and everything else. But I mean, it's one of those things where all of a sudden the soybean thing flips on its head pretty quick, and that changes that's a whole nother conversation.
It
going
is
in 25.
Yeah, it is, and I failed to include that into the list of things. Yeah, that could be a game changer, and the thing is, everyone's searching for answers on that, and it's an entire black hole, because it's like we created this. I'm not going to say artificial, out of thin air, this product, this renewable aviation fuel, and it's all great, and we've spent several years making these massive plants, and several of them have come online. There's several more scheduled to come online the next couple of years. And yet, maybe I'm not pointing fingers or throwing stones, but maybe there were a few holes in this thing, right? Meaning to use Chinese cooking oil. We allow that in. Should never have happened. The tax credit subsidy seems a little messed up. One couple little tweaks on that, and all of a sudden, we could have this industry that, like you said, increases domestic bean demand by 300 million bushels. But then the problem becomes, if we're crushing all these beans for diesel for planes, what are we going to do with all the meal? And
Right.
meal's on the lows. So there's a lot that goes into this, and it's hard to think through 7 steps down the road what some of the effects might be to some of these policies and industries that we're trying to prop up right now. I'm not saying anything right, wrong, or indifferent, whether it's good or bad. I'm just saying there's a lot of ramifications with some of these decisions. And right now, that whole renewable aviation fuel and the 45Z, I don't understand it. I won't pretend to even say that I understand it. It's very complicated, but everyone's searching for clarity right now, and it's just a massive black hole that the bean market needs some resolution to. It might be one of the reasons why beans haven't, broke decisively under $10. They've poked under there a couple times. They can't seem to get much momentum under 10, and that might be the reason that there's this bubbling hope, maybe, or realization that once you get this new administration in, and if you can get some clarity on some of these rules and laws, it could really be a good thing for demand on the bean side. So that might be a silver lining out there. Hopefully sometime in the first quarter we get a little bit more clarity on this renewable diesel stuff.
Yeah, that's this is one of those typical government things. The more they meddle, the more things get messed up. And you're right. I mean, it's almost like a damned if you do, damned if you don't scenario. You start looking at the byproducts that come from these things that are openly traded on the marketplace, like soybean meal, for example. Do we become the world's biggest exporter of soybean meal, and now we kick out Argentina and they don't count anymore, and then all that stuff that they're doing is on top of that as well. So I mean, it's a huge deal. Yeah.
It really is. And then you look at the one thing on yesterday's report. Again, I don't want to keep being the doom and gloom guy. USDA, I believe, left their Brazil bean crop estimate unchanged at 169 million tons. That is massive, man. That's I've crunched this out several times and converted it to bushels. I believe it's somewhere around 6.2 billion bushels. That's a big crop. That's a lot of beans, and they're going to directly compete with us. And it's going to be an uphill battle. Still time. I mean, they got plenty of growing season left down there. It's not in the bin yet, but things look pretty good in Brazil right now, and that might be the kind of the cold, wet blanket on some of this bullishness that we've talked about.
Yeah, I don't know. It's soybeans. You think about it a little bit. It could mirror, in order to maintain, to kind of isolate some of the competition that we see worldwide, it's almost like maybe turns into like a sugar thing, where domestic U.S. sugar is enough to just maintain what we need in the United States, which is saying something, because the United States eats a lot of sugar. But if you look at just that, now all of a sudden maybe it's the domestic soybean crop is there to maintain that kind of same level of thing, and soybean meal be damned, and we move on from there.
Yeah, and that's a thing that's in the back of I certainly, it's going to be people in a room that are a lot smarter than me, but that's the other thing I'm thinking about is, I don't know if we talked about this. So last time during the Trump administration, He uses, admittedly, the tariffs as a negotiation tactic,
Yeah.
right? Well, last time he was in office, you had a couple poor crops in Brazil. China had a massive appetite for beans. We had the only source of beans in the world. They needed our beans. Um, so we put tariffs on them. Well, maybe this time, arguably, they don't need our beans. Whether Trump comes in and there's tariffs or not, they don't need our beans if Brazil raises 6.2 billion bushels of them. So
Right.
maybe they're not even going to focus on beans because it won't matter to China. It's no skin off their back. Sure, go ahead and tariff the beans because we're going to buy 4 billion bushels of them from Brazil, and we don't need your beans maybe until Trump leaves office in 4 years,
Right.
type of a thing. So maybe we skip the beans, right? Maybe that's something that, because at the heart of it, I'm a free market guy. The freer the market and unencumbered, the better it works. We talked about all this stuff in the biodiesel stuff. You start messing with it, and you get all these consequences, 5 layers down the road. You're like, oh, I never thought about that. Just let the market work. So maybe there's some hope there. Maybe they skip some of these tariffs on beans, especially because it really doesn't matter. And I think that there's probably a lot of negativity built into prices around the assumption that we're going to have tariffs. And if we're not, and this is a big if, it's just throwing spitballs out there. You could probably see beans bounce 30, 40 cents just as the funds say, oh, well, it's been fun being short. We're not going to have a tariff. We might as well get out and take our money and, maybe run this thing higher into early first quarter and give people an opportunity to get some sales on the books.
Yep, for sure. All right, let's talk about hogs for a little bit. Speaking of soybean meal, talk about hogs a little bit. As you look at that market, man, they just getting banged around. They get a glimmer of hope, and then that rug gets torn out from underneath them pretty quick. So I guess as you're looking at the hog market right now, what are your thoughts there, and where do you feel like there could be some relief coming from?
Yeah, I tell you, hogs are incredible. Just looked yesterday, summer hogs at 102, north of 102, and it's December. And I'm not saying you've never seen that before, but it's not very often you see that. So funds have been massive buyers. I think that they're basically sitting with a record long position in hogs. It's a head scratcher to me, Casey, because as we're talking about these tariffs on the beans, China's the biggest buyer of U.S. pork as well, or they have been the last couple of years. Maybe it's the Smithfield thing that they're going to get around it and tariffs won't matter. I got to believe worsening trade tensions with China and them being the largest buyer of U.S. pork here recently would have some negative ramifications on demand potentially. But the hog market does not seem concerned about that at all. Again, maybe that's the Smithfield thing. I don't know. But that's my concern is, the market works and high prices are going to bring in production and we can ramp hog production up really quickly in this country and in the world. And China's slowed down a little bit. They've tried multiple times here to, give their economy a shot of adrenaline. It's been not real successful so far. I think if you're a hog producer, you really have to look at these summer months and say, how often have I had the chance in December to lock in, $100 plus summer month hogs? And the answer may be 1, it might be 0. You've got cheaper corn prices, cheaper meal prices, finally looking a lot better for the hog guy out there. But I would tell you, historically, anytime the funds get this long, when they get out, you have $12, $14 swings the other way. So I think it's a level that we need to manage risk at and possibly aggressively. That doesn't mean sell it all, but puts or some sort of LRP insurance certainly could help put a floor under it and guarantee some profitability out there, especially for the summer months.
Yeah, for sure. So cattle's the one thing you and I have talked about cattle quite a bit. About the time you think that it's going to fall out of bed, it gets better. You've seen this last week where cattle prices have not necessarily gone up, but they've just stayed the same and kind of solidified in there. Steady prices across the board. And there's not like a much real big, and this would be the time of year where you think you would see that natural reduction in price. But I guess, Chip, as you're looking at the cattle market, Like, what are your thoughts there? I mean, it just seems like a weird deal.
Cattle kind of stepped to the edge of the cliff there at the Grand Canyon and
Yeah.
thought about jumping off and maybe stuck one or two toes off, and then turned around and ran back. Right? They had a big break here a week or so ago. Got under some key moving averages, poked under the 200-day moving average. Funds have a big long position, but I just don't think the box B for the cash market's ready to break yet. And we've bounced this thing probably $4 off the lows pretty quickly. And we're not in new highs. We just seem like we're stuck in this 188, 189 range. So it's a bull market. The demand's there. The herd's not growing. It's the same story we've been talking about for probably 2 years now. And the demand is good enough that we're not breaking this thing. So I still think a lot like the hog market we just talked about, there's so much equity at risk now. You're talking about, these cattle guys buying feeders for, $1,500, $1,600, $1,700 and, selling fat cattle for, $3,000. I mean, so much equity at risk there compared to 15, 20 years ago that I think you'd really have to be aggressive managing risk. And again, it doesn't mean lock your price in, but, any of these news items we talked about, geopolitical, a war, something with China, just the funds deciding, hey, I've made money being long cattle in 2024. We got 8 days left of the year. Let's get out of some of these and, break cattle $10. You're going to see these big swings. So I think producers really have to manage things well and aggressively, locking floors in and leaving the upside open.
Yep. Yeah. Let's talk a little bit about energy market real quick. We got here to talk about geopolitical stuff with all the stuff we've seen happen over in Syria right now. Oil has had some moves. I mean, you've seen some things happen there, which you would expect to. But I guess as you're looking at oil right now, Chip, what's your expectation for oil as you look at it with the stuff that we have going on right now?
Well, I think that in spite of some bullish things on the geopolitical front with, Iran and Syria and some of the stuff that's happened, crude oil market's been a little bit reluctant to rally. I do think that my assumption, along with maybe the market's assumption, is once Trump gets into office, based on his first playbook from his first administration, he's going to try to ramp up production and domestically and become self-sufficient again in energy. And, that's not bullish to price. So I think a lot of people expect that we're going to spend a fair amount of time under $70, maybe in the upper 50s eventually as we ramp up production. The world economy, in particular China, has been sputtering and slow to grow as well. So that's been part of the problem. So, I think it's a mixed signal. You could always get a headline that spikes oil to 80 or 85 bucks, but I think in general the assumption is going to be we're slowly going to increase production domestically as Trump gets into office, and over the next 4 years that grows slowly and keeps a lid on things. That doesn't mean you don't have spikes along the way,
right.
But I think instead of 75 to 90 type of a range, you're maybe looking at 55 to 75 type of a range, and it seems like we're comfortable right now floating around that $70 range.
Yeah, that was what I was going to ask you next. Is you look at right now, you're looking at Brent somewhere about almost $73, and you're looking at West Texas right about $70. So it feels like if you get $75, it starts to slide back down to 70, and it overshoots that down to about 67, and it makes its way back up to 70. So it feels like the world wants $70 oil, or at least the people making oil want $75. Or $70.
Yeah, for sure. And I think they're making some money there. OPEC's, kind of tried to talk things up and extend some cuts. They're always going to be part of this equation as well, and potential big market mover. But I think that's probably for the time being, 65 to 70 seems like a fair price and a comfortable price for the market to be right now. But can always see those spikes with some sort of news event or war or something like that pops up out of the blue.
Right. So last thing on energy, as you look at what's playing out right here, would you feel pretty confident that right now this would be a good time to lock in some some input costs as far as maybe diesel, gasoline, fertilizer costs, those kind of things comparatively to where things are at right now?
Yeah, it's tough. We've been playing it more hand to mouth on the fuel just because of all those reasons we talked about why we may be kind of slipping lower here. Now that doesn't protect you necessarily against some big news spike. It's really difficult, especially from a farmer producer perspective, to hedge their fuel, right? Because there's a heating oil market, which is essentially diesel. Options are very illiquid, nearly impossible to transact in the options market. A lot of clearing houses don't let you cross hedge with crude oil. It's really difficult. I wouldn't talk someone out of it, especially if your tanks are getting low and you need to fill up. I don't know if you have to go right out under the assumption we talked about that when Trump gets in, if we start drilling and slip this thing, down into the 60s or maybe upper 50s, we should grind fuel prices lower. I don't know that I'd, fill up 18 months or 2 years worth right here. If you need to make some purchases, absolutely. And I don't know if you need to get super aggressive at, locking a bunch in or hedging any right now. Maybe hand to mouth might be the best way to do it, knowing that you still face that risk of some geopolitical thing that would spike oil to $80. But, the odds of that are not zero, but they're certainly not, huge at this point either.
Right. Okay. All right, Chip, good stuff as usual. Folks want to reach out to you and get more information what you're doing over at Blue Reef. What's the best way to do that?
Yeah, best way is just call our office in Morton. It's 309-550-7213. We'd love to chat with you about how you might be able to get a better plan, right? It's really crazy out there, as we illustrated, and a lot going on. So love to chat with you during this time where a lot of people are planning that right now. They're meeting with their bankers. They're looking at what they, what their crops were, and thinking about the markets more than they have been really since harvest. And now's the time to do that and make a plan.
You have something to think about now. That's
exactly.
Beforehand, it was just like, that's still the same. Look at that.
Yeah.
So.
Right. Where's corn? Same place it was 3 months ago.
Yeah. So a lot of moving parts here, and a lot of volatility coming our way. And like you've always said, volatility allows you to make some money. So there's opportunities.
Gives you opportunities for sure, but you got to be prepared for it.
Got to be prepared. That's right. Chip, appreciate you being on, man. We will catch you again next time, and we'll go from there.
All right. Thanks, Casey.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast. Check out the video version over there on the YouTube channel, which is the Moving Iron Podcast YouTube channel, and check us out on TikTok at Moving Iron Podcast. Go to movingironllc.com for everything Moving Iron related. And with that, I am Casey Seymour with Chip Nelligar. Let's move smart, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment, like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.